Hey everyone, in this video I'm going to do some stock price forecasting for supermicrocomputer stock, and you're not going to believe one of these scenarios here where supermicrocomputer stock price could soar to astronomical levels that you're not going to believe. So without further ado, let's jump right into this stock price prediction.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so to make this estimate, to make this stock price prediction for supermicrocomputer stock, I need some estimates. I need some numbers to go off of. I don't want to just make up numbers out of thin air. So one of the numbers I'm going to need is the analyst forecast for supermicrocomputer stock and its earnings per share for the next 5 years. So according to the Wall Street analysts that are following supermicrocomputer stock, they think its earnings per share will rise by 0.2% for the next 5 years. 48.2% earnings per share growth for the next 5 years. That's one of the estimates I'm going to assume for my stock price prediction. I also need its next year 2025 earnings per share estimate. And again, according to those analysts that are following supermicrocomputer stock, they think its earnings per share will be $30.82 in 2025. Now, if you'll pay close attention here, you'll notice that the EPS estimates have been rising almost continuously for supermicrocomputer stock as demand for artificial intelligence continues to soar. Just 90 days ago, analysts on Wall Street were expecting $19.45 in EPS for supermicrocomputer in 2025. Then they boosted that up to $27.81 60 days ago. Then they boosted that up to $29.56 30 days ago. Then they boosted that even more 7 days ago to $30.83. And as if to say, okay, enough is enough, they brought it down to $30.82 by 1 penny today on the current estimate, following those significant increases over the last 3 months. So optimism continues to rise for artificial intelligence and AI stocks because it's supported by strong demand from enterprises. There's actual spending, cash flow, and profitability arising from demand of artificial intelligence. It's not like the frenzy that happened in electric vehicles in 2020 and 2021, where it was all fueled on hope and enthusiasm before there was any spending, before there was any profits, before there was any cash flow. This is justified based on fundamentals, based on profits, cash flow, revenue, actual tangible results, not just empty hope and faith and enthusiasm, right? We're seeing it already in results from Nvidia and other companies that are seeing booming demand, booming sales, booming profits. And so it's supported by this kind of growth, and you can understand why these stock prices have exploded the way they have. All right, another one of the numbers I'm going to need is supermicrocomputer's current share price. Right now it's trading at $948.99, coming back down after soaring in 2024. Of course, earlier in 2024, I recommended supermicrocomputer stock as a buy. I had it rated as a buy for a while, and then I told investors to take profits somewhere around this price range here, and it's come down since I've recommended some profit taking in supermicrocomputer stock. The reason I recommended investors take profit is because the valuation had soared to levels that I felt were a little bit getting ahead of itself. Sure, demand is strong and profits are increasing, but I felt that the stock price got a little bit ahead of those increasing forecasts for revenue and profits and cash flow. And that's why I recommend that investors take some profits from supermicrocomputer stock. And that's turned out to be a good recommendation so far. I'm also going to need supermicrocomputer's forward price to earnings ratio. It's come back down a bit. It reached peak levels of around 40, and now it's back down to 31, more reasonable levels for a company like supermicrocomputer. Remember, before this boom in AI, supermicrocomputer stock was trading at forward price to earnings multiples of 12 and below. It was only since the beginning of 2024 when that enthusiasm absolutely turned into a frenzy and the stock price valuation increased from a forward PE of 12 all the way up to 40. This is where I said, okay, enough is enough. It's time to take some profits in this stock. The optimism is a little bit too much. Sure, it's really strong, but the optimism is getting ahead of itself. It went beyond, right? And so you can see it pulling back here because mainly valuation concerns. Valuation is why I think the stock price is pulling back, because it got so expensive so quickly that it was due for a pullback. Still, now that we have the numbers to make this stock price prediction, you're going to be shocked at some of these estimates. So if the company does deliver $30.82 in earnings per share in 2025, like Wall Street is estimating it does, and we apply that 48% growth rate, again, like Wall Street expects, and we apply that for 6 years, we get an earnings per share estimate for 2031 of $326 per share. That's explosive earnings per share growth. Wall Street is very optimistic on Supermicro Computer's earnings capability. So if we apply that $326 EPS estimate for 2031 and we maintain that forward PE multiple of 31, that means Supermicro Computer stock price could reach $10,000 per share by 2030, $10,122.40 to be precise. That's a roughly 10x increase from where it is today, and the stock price has already soared so far year to date in 2024. Now, I will say I don't think this scenario is very likely. This is not my most probable scenario for Supermicro Computer stock. Nevertheless, if all else remains the same, its valuation multiple remains the same, the EPS growth rate remains the same, and it goes on that trajectory, that's where it's headed. Now, that may be remarkable, but so is the growth in artificial intelligence and demand for AI. So if all else continues the way it has been, which I don't think is very likely, but if it does continue the way it has been, the valuation could soar to $10,000 per share. Now, Supermicro Computer will likely do some stock splitting before that happens, and they'll sell some shares, and that'll cause some decrease. But nevertheless, if I'm assuming all else remains the same, that's a significant valuation. Now, more probable, and I think more likely, is that the forward PE multiple declines significantly. So if the forward PE multiple falls to 20, still the stock price could increase to $6,500 per share by 2030. That's a near 6x increase. If the forward PE were to fall to 15, the stock price could rise to $4,900 per share, a roughly 5x increase from where it is today. If the forward PE were to fall to 10, levels that were normal before this AI frenzy, then the stock price could rise to $3,265 per share by 2030. Again, that would be a nearly 3.5x increase from where it is today at $948 per share. And you can see why I expect the forward PE multiple to come back down, to revert more towards its longer term average. You can see the PE forward was never above 12 at any point in the last 3 years, except for the beginning of 2024, where it exploded. So I expect some mean reversion down closer to this level here around 12, where I think it'll settle into. So if I was to say my base case, my most probable case for where Supermicro Computer stock price will be by 2030 is somewhere between these 2 points, the forward PE of 10 and 15, and a stock price somewhere around $3,000 per share and $3,300 per share is where I think the stock price could be in 2030. That is assuming, of course, all else remains the same and the company does deliver those levels of earnings per share growth for the next 5 to 6 years. Because if it doesn't, then this valuation is going to be significantly lower. For instance, let me do a hypothetical scenario here where the earnings per share growth rate, instead of it being 48%, if it's cut in half, let's say to 24%, then the valuations fall meaningfully. You see where it goes down to. The highest point falls from 10,000 to 3,400, and the lowest point falls from 3,300 down to 1,100. So this earnings per share growth rate is the most important factor for where Supermicro Computer stock price will be in 2030. As long as the earnings per share continues to demonstrate strong growth, then I think the stock price will be meaningfully higher 5 years from now. That's the key. That's what I'm focused on. And that's what investors interested in super microcomputer should focus on as well. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.